Hey Matthew, can you hear me?
Yeah, I hear you loud and clear.
Yep, yep. All right. So let's get this started. How's the afternoon going? Hmm?
Sorry, what was that?
I said, how's the afternoon going, man?
Pretty chill today. I didn't do much.
Okay.
Just explored downtown. That's about it.
Where'd you end up going?
Just walked down the street, found the scooters, and did all that.
Okay. You went over to Monroe Park?
I'm right next to it.
Oh shoot, nice.
Yeah, I'm like
Oh
one.
wait, you're in the new dorm rooms then, right?
Yeah, gliding.
Yeah, they have the gym on the first floor, I think.
Yeah,
Yeah, that's nice. That's nice. It looks cool. How you like it over there?
it's pretty chill for real.
Okay. Nice. Yeah. So you're gonna stay there like all throughout your 4 years?
So what I'm doing right now is a little program. It's called acceleration, and all this does for me is like basically put me ahead of class before classes even start. So I
Okay.
know things before the class even starts.
Okay.
Yeah. So I won't be back till like August 2nd. Then classes start the 20th of August.
I gotcha. All right. So I think in high school, it's like if you want to get ahead on your curriculum. So you're doing like advanced placement courses, right?
Basically,
Okay.
so like right now I'm basically taking Chem 101 and like Math 151.
What's
Like
your major?
bio.
Bio. Okay.
Yeah.
You want to become a doctor?
Yep.
Okay. Okay.
Yeah,
I was I was a pre-med major for a year until I switched over to engineering. I like pre-med. It was good. Anatomy course was one that stuck with me the most.
yeah, that's why I've like got my little attraction to biology is with anatomy.
Okay. Hey man, you're gonna do great.
Yes, sir.
All right. So just to get you started off with everything, right? So basically, you say that you have zero experience with trading whatsoever, correct?
Yes.
All right, cool. So here's a chart, and I want to go ahead and come down here. All right. So right off the bat, when you think of trading, what's the first thing that comes to mind?
Like you give someone like something, then you get something in return.
Okay, so it was an exchange
Yeah.
of one hand to another. Exactly. So there's somebody buying, and then there's somebody selling. Now, what we're doing on the charts is just a reflection of time and price. And the
Gotcha.
market moves in waves. It goes up and it goes down. 50% of the time, you know, that's what it's going to do. Now, markets can move like this. And eh, to you, right, in your own words, what kind of markets does this look like?
Uh, I couldn't tell you.
So, uh, price goes up here. It's like 23,000. Then it comes down. Then it comes back up. It's almost 2,400. Then it comes down. Then it goes back up. 2,400, all time high. Then it comes down. Then it goes up again, right? Now you broke
Mhm.
that up high over there. So if this is, would you say this is like a trend?
Yeah.
Yeah, because you got a series of highs being put in,
and a series of lows.
lows being respected. Then we break that one and go higher. We retest the previous range, and then we keep going up, right? And this is a pattern, right? And we're just going up. So that's what we would call a trending market. Trending market can be trending up or it could be trending down, right?
Yep.
That's basic market structure. So you can be trending up or you could be trending down. And there's another type of market, right? There's a market where it looks like this. You got that, that's the high. You got that, that's the low. All right. You see this, right?
Yeah.
As opposed to the other one, it was making new highs and new lows. This one, what can you tell me about this one?
Well, it reached the top, then it started going down, then it shot back up again.
Hmm. So a lot of the movement is stuck inside this high and this
Mhm.
low, right?
Yep.
So this is what we would call a market that's consolidating. This is $15 worth of value. Sometimes you can get like a $20, $50 move if you're playing a long term or if you're paying attention. This is somewhat of a narrow range for gold. So the thing that we want to pay attention to is what is price doing on a large scale, right? So that's why
Hmm.
we look at different time frames so you can see the candlesticks a little bit more clear. Okay. So every single candlestick that we see is equal to 1 hour.
All
These
right.
dotted lines over here that's going vertical,
Yeah.
that's a new day. So where my cursor is 7:10, that's for that day. Today is the 14th
Yeah.
and it's Sunday. So the market opens every Sunday at 6 p.m. So this is the market live right now. If we wanted to, we can go ahead and enter in a trade hypothetically and see how it would play out as we learn. I think that's the best thing to do when you're learning. So, one thing that we can notice to you, does this look like a market that is trending or consolidating? This is the ninth. We're just looking at the past 1, 2, 3 days.
Hmm.
Now, I'm going to have a visual aid for you. So, we have this high, then we have this low, then we had that high, this low, that high, this low, that high, this low, that high.
So it's trending.
It's trending. It's breaking highs and it's respecting lows. So we're trending up. And where we're at right now, we're 50% of this large move up. Odds are we may come back into this previous range all the way back over here like we did with this time. So it's based off of the price action that we see during the day in our session. So there's three major sessions where it's highly recommended to be looking. You have Asia, London, and New York, right?
Yep.
New York is 8 through 11,
All
and
right.
these are 3-hour windows. London is 2 a.m. to 5 a.m., and Asia is 8 p.m. to 11 p.m.,
All right.
right? Now, if you're going to be trading intraday, like every single day, you dedicate an hour or so to looking at the screen, and whenever those and one of those time periods, whether it be Asia, London, or New York, you can execute a trade out of your playbook, one that you specifically recognize through backtesting and practicing, using demo money to just develop the craft and then retry it in live time, right?
Mm-hmm.
And that's the whole process. Some learn quicker than others. So for some people, it could take a couple years. For some people, it takes a couple months. And I believe that, in education, you want to shorten everybody's learning curve. So you want to explain it as simple as possible so that they can grasp the idea and then develop their skill at a rapid pace. So we want to go from zero to mastery as quick as possible through efficient learning and good habits. Right?
Yes, sir.
Yes, sir. So, with that being said, we are just understanding the fundamentals right now at this point. So, we identify that gold is trending up. So, we're going to be looking for, larger moves to go to the upside, but we can still make money when we identify that, okay, what is price doing right now? We've had this right here, and now we're tapping in to this consolidation range that was created over here. Big moves happen during consolidation. You see when we consolidate right here, then we have an expansion. That's how the markets move. So that's why you must develop patience and wait for your zone to be hit. No zone, no trade. Remember that daily as you come to the screen. So we notice right here, this is the high of Friday, or is it the high of the previous week? And this was the low of that same day down here. Yeah, this is one tool, and I highly recommend you watch his videos. His name is Dave Teaches. So DTFX. If you YouTube search that and watch the masterclass, that will definitely get you up to speed.
Got you.
And then this most recent tool is called ZIL, and that's Zone to Liquidity. So I'll explain how to use that a little bit later. But one way you can use it is this was the top of the trend, and this is the bottom. Typically, when we get to the 50% down here, we could expect a reversal to take us up higher. But it's possible that we can have a reversal at any one of these points coming down. So we must pay attention to price action as we enter these zones. No zone, no trade, right?
Yep.
Yes, indeed. So on the 1 hour chart, we can see things from a bigger perspective. We can see a couple of days. Quite recently, online, there's this account called Gorilla Chapters, and I saw that he was on a whole different time frame. We'll get into this a little bit later, but these are ticks. They're not really based on time. So if you want to be more precise when you get advanced, like to mastery level, I believe you would know how to do this as well. It'd be important into your developing your skill.
All right.
Yep. So we're gonna go down to the 1 minute, right? So this is from 4 p.m. over here till 6 p.m. right here. So this is 2 hours on the 1 minute, all right? And what we can do is know, extend the magnifying glass and get a bigger picture of it, right?
Yep.
So you're kind of looking at this under a microscope. And these zones that are highlighted are based off of this orange line was the previous week's high. So if we get to that level, then we want to zoom in and watch how market is the moving, the order flow in the lower time frames. Make sense?
Yeah.
Okay. So that's just understanding that you'll see the exact same thing on all time frames. It's just a different representation of how much you're focused in on. So if you're watching every single candle print on the second, that means you're looking at it through a very fine lens. So as long as you understand where you are during time and price. Now, this was yesterday's high, which was Friday. Yesterday is in the last training day. So I'll mark it off right there. We're at the 30% of that downtrend, the retracement down. So since it looks like we're downtrending so far right here, we can watch how price reacts throughout the levels horizontally. So we play the waiting game. You can see that we're in this little zone right here. And I'll explain these tools later. The one thing that I want to emphasize is just watching how price reacts to your zones until you get up to a major level to where you can have an A plus setup. Make sense?
Yeah.
Okay.
I'm following.
This platform that I'm using right now is called Top Step. Um,
Mm-hmm.
I would highly recommend you download an app called TradingView so that you can look at your chart and you can follow along as I do this as well next time.
What's it called?
TradingView.
Trading View.
Yeah, it's completely free. You don't have to buy a subscription to use the program. And yeah, there's if you want to know a little bit more about it, we can I can walk you through it on a different time.
Okay.
Yeah.
I just been taking notes. My fault.
No, no, that's perfect. Let me know if you want me to slow down.
All right.
So again, I'm gonna bring this out to maybe like a 5 minute. There we go. So 5 minute, you can kind of see the pattern a little bit more,
Yeah.
right? So between these two dotted lines on the left and right, the vertical ones,
Mm-hmm.
if we trail the highs and lows, it looks like we're doing what? This-
Another trend.
We're, yeah, we're doing a downtrend. We're doing
Downtrend.
down, respecting the highs on the way down. Then what happens? We break past one of the old highs, and
Mm-hmm.
now we're trending up. And this happened right in that 3 hour window, right? So at 8 o'clock, if you're at the screen at 8 o'clock, you can identify this move back up to then get in for a good position at the third hour, 10 a.m., to ride the trend up. If you just know what point you're at in the day. So now we see ourselves on the backside of that move, right? And our job
Mm-hmm.
when we get to our 3 hour window, which we would take a trade during Asia session, which is 8 p.m., right? So
Yes.
8 p.m. tonight, if we see that we're in a zone like this orange dotted line or somewhere around here and have more information on how price is moving, whether we respect this high or we break past, then we can have a thesis on where to trade for that session. And this will make a lot more sense once you see it happen again and again. And just notice how price trades horizontally across the levels, right? If you see where it's consolidating at, then you can see where the targets are and position yourself to make a lot of money.
Okay, so what I'm understanding is that if it stays in that zone until around three, right,
Mhm.
then that gives us time to trade because in theory it'll keep going in the um same zone, like staying that, right?
Oh, if you, yeah. So on the what they call gap times in between the sessions, right? Is what you're
Yeah.
referring to? Yeah.
Mhm.
In between the gap times, if you see that price has been consolidating between those two levels for a while, then you can anticipate that you'll have a parabolic move in the direction either towards the trend or against the trend, depending on the pattern that you see. And the patterns that we look for, this is universal for all time frames. If you're expecting a reversal, would be this: you'd break out of one level, you'd come back, you'd break out again, come back, break out again. Because normally in a healthy trending market, you have about 4 to 6 swings, right? You can anticipate that on average. So that narrows down on probability. And then you have something like this happen where we break a low and then we come back up to retest that same zone, giving us an asymmetrical risk reward based off of this, that we may come back down. And now we're trending down, a part of a larger move. So, how do we take our trade? Within that previous range, right?
Mhm.
And these three lines, right, is just pretty much division. So this is 30% of the move, this is 50%, and this is 70%. Odds are if you're breaking past the 70, wait to see if you break past that previous high. And if you do, then maybe it's going the other way, right? And I have a graphic explaining each scenario. Sometimes, price may trade away to come back to it at a later time. But that's besides the fact. We're just searching for the immediate decision on that day. So this is one setup and it goes for both directions. So this is a downtrend, right?
Yes.
Then you see that reversal. We break that high and then we retest. The setups that happen for, bullish or green upward movement trends right here. The term for downtrends is going to be bearish. You familiar with those
Bearish.
terms? Yeah, bearish. Bearish is a downtrend. Bearish is down and bulls are up. And it's based off of the idea that when bulls attack, they attack up. They try to flip their opponents up in the air. When bears attack, they swipe down.
I understand.
Yeah. Oh, Wall Street stuff. I read this in a couple books.
All right.
But yeah, that's basically the idea. Now, if you want to get started, you can go ahead and download TradingView. You can do it on your phone. You can do it on your computer, whichever you're comfortable using with. And you can go into the trading panel and do a demo account, paper trading account, basically. So it's just virtual money, and you can just practice the setups and practice the most important thing, which is risk management, right? And that's another thing that a lot
Gotcha.
of
Mhm.
us, yeah, that's one thing that I had struggled with before. I'd say very early on, my very first year actually, and this is my fourth year. So let's just say hypothetically you put in $500 into an account, right?
Yep.
How much money are you going to risk on each trade? Honestly,
On each trade.
on each trade. Let's just say you do 2 to 3 trades a day in a week.
Two to
So
three
every
trades a week.
sometimes if you get your trade right on the first time, then you're done for the day.
Okay. So if I put down, let's say 25.
25 a trade?
Yeah.
Okay. 25 a trade. So 1 second. So that means you got 20 trades. So you got to be wrong 20 times before you blow your account.
I have to be on 20 times.
Yeah, you have to be wrong 20 times in a row in order for you to blow your account. That's pretty good.
Okay.
Some people, if they want to be conservative, some people may risk
Go
something
lower.
like, yeah, maybe something like $10 per trade. But that's all dependent on your play style, like your trading style. So we have that. So for every single trade, we want to do what is called a 1 to 3 RR, which is risk to reward ratio. So for every dollar, we want to make three. So if we're right on our trade, then we can anticipate to get $75 per winning trade, right?
Yep.
And in this instance, for every $10 we risk, we get $30 per winning trade. And I'll go back into some previous examples. I'll walk you through my day on, I think it was NASDAQ.
Wait, so quick question on the 1 to 3 trade.
Yes.
Does that also work like if you mess up?
Okay. I think I understand what you're saying. So let
Like if
me,
you lose the money?
yeah. So
So instead of gaining 75, I'm losing 75.
no.
So
So you remember one R, right? One
yeah.
risk, one portion of your risk is $25. So if you're disciplined and you stick to your rules in every single trade that you're playing on this account is
Hmm.
$25 per trade, then you can only lose $25 per trade,
Okay. Okay.
right? And then you have to understand that, all right, if I'm using my full risk on one trade, $25, am I okay with doing one setup? And if I'm wrong, I'm out. Am I going to stick to that rule? And you have to answer that honestly. If not, then you have to make a plan for that. You know, everybody's different. So it all depends on how you feel once you practice, right?
Hmm.
So yeah, that's the 1 minute. Okay. When you see this right here, right? This is a 5 minute chart for every candlestick. It's 5 minutes worth of time. And this is zoomed out so you can see one day, the second day, and now the third day. And if you're looking at the high and the low for the previous 2 days, we went up to this orange line, which is 50% of the move down, right?
Yep.
So again, just make sure that you're paying attention to if you're in a zone. So just measure each move because all of these are just consolidations that expand and they come back for a measured move. If you can anticipate whether you're at the level, because right here we're at a level from the trend up, right? Just
Yeah.
establishing a good sense of direction. So now we've broken this low down here. So what we're going to look for possibly is, let me redraw this. From this range right here. Why? Because we have this pattern forming. That high gets taken. Now this low gets taken, right?
Mm-hmm.
So where do we go? Within that previous range. So we want to get a trade from these levels over here, right?
Yes.
And then we can use this tool that Dave released last week. Uh, I've used it personally, back testing, and it's helped me a lot. It helped me target the best trades that I can see on that day. And it's basically called zone to impulse. Now, if you look at this screen, right, do you understand what's happening, or maybe there's too many lines? Let me know if you see something that looks a little confusing, or are you following along?
Now I understand what's happening.
Okay.
The little white lines are the where you want the trade to go, and
Yeah.
then yeah, I see it. I see what happened.
So we're looking at it a little bit, further back. So this is from 9 p.m. yesterday up until about six. What time is it right now? About 6:40 almost, 6:37. So what we would be looking for is a continuation down, possibly based off of how prices moving within this area, or this area, right?
Mm-hmm.
And what we're doing is we're looking for the same pattern over here where we breaking highs and lows because we're trending up to get here. And then once we see a low broken, then we're going to look in on a smaller time frame to see that same pattern happen again in one of these areas, which is why when we're on the screen, we want to really pay attention to what's going on. Now, it's possible that, this may be a larger time frame for us to move up again, but we just want to pay attention to the screen in our session and get exactly what we're going to target. Every single time that we get into the market, we anticipate that we're going to get paid that day, right? That's why you show up to work, right? In a
Yeah,
job. Same thing, you should treat it the same way in trading. And, eventually, to me, it becomes like a video game. You're just trying to beat your high score, basically. And it's
okay.
like, how good can you get? And that's how I believe it is. And I've been able to work with some brilliant minds who've achieved a lot of success. So I believe that you can do this as well.
Okay.
So how you feeling?
I'm feeling pretty good about it. I took down
Good,
some good notes.
good, good. So this is like the introductory, like 101, and we
Yeah.
talked a little bit about risk. We looked that up, and we have a basic universal understanding. Now, there's a lot of tools and a lot of things that I need to explain to you as well, which, we're going to document this whole thing and we're going to have this organized. I have a whole curriculum. So it's from 101 to at master. And we kind of want to keep this, as simple as possible, just so you can be field ready, maybe in about a week or two. How you think about that?
That's fine.
All right. So, just to get on and trade on demo accounts and really craft that skill. But first, for the first 2 weeks, we're going to back test.
Okay.
All right. So if you downloaded TradingView, I can send you a screenshot or I can help you a little bit later on tonight if you want to cop on later and we'll look for these setups to happen so you can see, it develop in real time because developing your eye is the most important thing with this, right?
Mm-hmm.
So yeah, just hit me up on the Discord, and I'll share a few more screenshots of examples and the process as well.
All right.
All right. So yeah, that's about it. I'm about to head back inside. I'm outside in the backyard right now, and it's hot.
Yeah, doing it outside is kind of crazy.
Oh yeah, I'm chilling, but the laptop screaming at me right now. All right, man. So yeah, let me know if you have any questions through the Discord, and I'll talk to you from there.
Okay.